What's up, guys? I'm Johnny, and on this channel, I talk about real estate investing, and current market trends that impact beginner and experienced investors. And with thousands of real estate transactions under my belt, and as a guy who loves helping other people win, I made this channel to share some of the things that I have learned along the way. And if that's something that interests you, you might want to consider subscribing. If nothing else, I'd really appreciate a like on this video just to help the algorithm and show some support. Now, today I want to talk about exactly what I would do if I wanted to buy a house in 2024. And I'm going to give you a step-by-step checklist that you can follow that will help prepare you. And if you want a PDF of that checklist, check the first link in the description down below. Now, here's the thing. I want to be clear on this. This is not an offer for any type of financing. I'm not quoting you interest rates, and I'm certainly not telling you that you're approved to get some sort of loan, okay? A little CYA for me. Now, I made a bunch of videos about buying investment properties. If you're looking to buy an investment property, the third link in the description down below will get you to that video. This video is more about buying a primary home that you're going to live in. And it's no secret that the market is it's just incredibly challenging these days with house prices so high. And on top of that, we have a situation where we're in a rising interest rate market. Interest rates just keep going up. And wow, this is making it really difficult for first-time homebuyers to buy homes. But it's also making it difficult for homebuyers to sell their house and buy a new one. And that's actually due mostly to qualifying factors, because as interest rates go higher, so do the mortgage payments. And there are certain debt to income ratios where homebuyers need to stay under in order to qualify. And there's mixed reviews on what's going to happen in the housing market over the next 12 to 24 months. And really, nobody has a crystal ball. So generally speaking, it's my opinion that if you're in a good financial position with strong financial income, meaning you have a stable job, it's kind of always a good time to buy property. Could house prices go down? Well, of course they can, but over the long run, they're also likely to go back up. With all that being said, it's time to dive in. So the first thing I would do if I was going to buy a house in 2024 is I would evaluate my credit situation. Now, a lot of people get really uncomfortable when they talk about their current credit score. When I'm talking to a buyer, they'll say things to me like, well, my credit isn't very good. And they say that because they're worried that they won't get approved due to their credit score, which very well might happen. But here's what you should know about that. There's a ton of loan programs out there, and many of them cater to people with less than perfect credit scores. I want you to know that because many times credit scores are not actually the disqualifying factor in a loan approval. When you improve your credit score, what you're really doing is you're just getting access to a lower rate. And that lower rate comes with a lower monthly payment. And of course, that's the goal. So I'd recommend downloading a free app like Credit Karma. Now, Credit Karma is going to give you a snapshot of your current credit. It's also going to give you access to other things that you can do to improve your credit score. And it will give you notifications when things change. Apps like Credit Karma are not perfect when we're talking about mortgage credit, because mortgage credit and Credit Karma, they're reflecting two different types of credit scores, which is really lame, but that's just kind of the way it is. So here's my point. It's a good idea just to have an eye on what's going on, start making changes to improve that score over time, and just get focused on bringing the score up. The second thing I would work on is getting all of my credit cards paid down. Of course, paying down your credit cards is absolutely going to help your credit score as well. The other side of that, it's going to help qualifying as related to your debt to income. What banks look at every month is how much money you bring in versus how much money is going out or required to satisfy the minimum portion payment towards those credit cards. And when you pay those down, it's going to help that ratio and improve the likelihood of qualifying. And also because the next step is going to require us to think about down payment money, we have to consider the interest we're paying on those credit cards, which is going to eat into any type of savings funds we can create. What I mean is, if you're paying interest on credit cards every month, it might be hard for you to save money for a down payment. Now, I'm not giving any financial advice here, but I can tell you what I did when I got serious about my credit situation. I found a zero interest credit card and I transferred all my balance. And that way, all of the money that I was paying on those balances went straight to my principal portion. Third thing we need to think about is start thinking about our down payment funds. And this is where a lot of people get hung up because they believe if you don't have 20% to put down on a house, you won't qualify. Now, it is true that with a bigger down payment, you definitely will get a better interest rate. And because you're not financing as much money, your payment's also going to be lower. But some of us don't have the ability to put significant funds like 20% down, and that's okay. There's actually programs out there that require no money down. These programs do have specific requirements, and a lot of times you have to take an online class to qualify, but that's really not that big of a deal. So what should you be budgeting as a down payment? I would recommend starting by just shooting for 3.5% of the potential purchase price. Basically, that's going to be $3,500 for every $100,000 you're financing. So let's do some math. If you want to buy a home for, let's say, $400,000, you would simply take $3,500, multiply it by 4, which means you would need roughly $14,000 in down payment funds. Keep in mind, you'll need roughly another 1 to 2% for things like closing costs. That's roughly $4,000 to $8,000 in this scenario. In my experience, this has actually been the hardest part for first-time homebuyers. They qualify, but they don't have down payment funds. If this is you, I would connect with the mortgage broker and ask, what kind of no money down programs do you have available? And the last thing, just to note, with a lot of these programs, the money can actually be borrowed or gifted from a family member. The fourth thing I would recommend doing is making sure you have all of your documents ready. You want to make sure you have 2 years of W-2s for anybody who's going to be on the loan, have them ready and easily accessible in a PDF format. You also need to have 2 years tax returns on standby. And you're going to have to provide pay stubs covering the last 30 days. Another thing that you're going to need to provide is going to be bank statements. And these bank statements should show down payment funds. So any money you're going to put down on the property, you need to show seasoned in your bank account for 2 months. That just means the money needs to have been sitting there for 2 months. So you're going to need the last 2 months bank statements showing this down payment funds. Keep in mind, when you're having your initial consultation with the loan officer, you want to be as detailed as possible about your work history. What that means is if you've recently changed jobs, make sure you pass that information along to the loan officer so they can put the file together correctly and request the appropriate supporting documents. Now, the fifth thing is fairly obvious. You need to talk to a loan officer, and I would recommend talking to a loan officer who works for a mortgage broker. If you're working with a broker, the loan officer is going to have the ability to gather the information and then find a bank that offers a really great program for your unique scenario. Because when the banks are competing for your business, you can likely get a better deal. And it's the job of the mortgage broker to shop around in your behalf. Not only will they save you time, but they'll save you stress, I promise you. And honestly, if you're calling the banks looking for a deal, it's likely you don't even know what to ask. So hire somebody with experience who can do it on your behalf and save you some money. That brings me to my sixth and final step. Talk to a real estate agent. Now, a lot of people do this backwards and they call a real estate agent before an LO. But if you call a real estate agent before you get a loan approval, they're just going to tell you to talk to somebody who can get you financing. They're not going to want to talk to you or show you any properties until they know that you qualify, because then you'd be wasting everybody's time, yours included. Remember, a real estate agent's job is to help you find a property that you want to buy and then negotiate the contract with the seller's agent. When they're having those conversations with the seller's agents, the first question that's going to be asked is, can you show me the pre-approval and proof of down payment funds? So the real estate agents don't want to have conversations with the seller's agents until all of the financing arrangements are in place. And I just want to remind you that the first link in the description below is going to get you to my Homebuyers checklist. And one of the documents that's included is a wants and must-haves worksheet. And the wants and must-have worksheet, which is also hard to say, is basically going to be an outline of two different things. Items that you must have when you're buying a home. For example, 3 bedrooms maybe is a requirement because you have kids. And the wants portion is going to be things that you're maybe a little bit negotiable on. Things like maybe a pool or a 3rd-car garage. Now, hopefully this video provided some value, and if it did, like and subscribe would be awesome. It would mean the world to me. I want to thank you guys for stopping by. God bless.